Now, let's be honest, taxation can often feel overwhelming and complex. But today, we are going to strip away that confusion and get into the heart of what you really need to know when it comes to personal income tax. Today's format is going to be a little different from what we already know, and I'm excited by it, okay? So instead of the long presentation on a topic like taxation, yes, I know it can be very boring. And so we've gathered the most pressing questions you have submitted to us during your registrations, and we'll be spending the next hour with two tax experts who will answer them live in a Q&A session. And we'll break it all down for us, okay? So whether you are seeking clarity on deductions, tax returns, or any tax-related concern, this session is designed to give you practical answers and clear guidance, all right? But before we begin, this session is being recorded and it will be available on our social media handles for future reference. So make sure you visit our handles and like our pages as well, okay? All right, so without further ado, I would like us to meet our panelists for today. So our first panelist is by the name Frederick Kofi Ame. Fred is the CFO for Insano Limited. He holds a master's degree in industrial finance and investment. He's a chartered accountant and a chartered tax advisor. He has experience in financial analysis, tax planning, treasury management, and forensic audit, and many more. I mean, his profile is a lot, so I've managed to summarize it here for you all. Fred, you are welcome. Can you please give us your introductory remarks?
Thank you, Betty. I'm very happy to be part of this today. Tax has always been part of every nation and every national. Whichever country you are, you pay tax. If you move from Ghana to Togo, you pay tax. Move from Ghana to Cote d'Ivoire, you pay tax. And it's part of our daily routine and everything that we do. In essence, so far as you are making some form of money, you pay tax. And so far as you are buying anything on the market, you pay tax. So I'm happy to be here. I'm happy to explain to you taxes that affect you, especially in our Ghana, and how we can navigate our way through as the years go by. Thank you very much for having me.
Thank you so much. We are happy to have you here as well. So let me introduce our second panelist for today. Mr. Isaac Nanwa. He is the finance manager at Insano Limited. He's also a chartered accountant and a chartered tax practitioner. He has extensive experience in optimizing financial operations across various industries and an expert in accounts management, overseeing budgeting, forecasting, and investment analysis. He's a passionate preacher of the gospel as well. Isaac, you're welcome. Please share your opening remarks.
Thank you, Betsy. Like you mentioned, my name is Isaac Nanoa. I'm happy to be part of today's webinar. Tax. Albert Einstein once said that tax is the most hardest thing in the world. And so it's been the most hardest thing doesn't mean that it's difficult for anybody at all to navigate, but it's because its principles are limited. And so we're here today to ensure that we break down the simple things in tax, not with the jargons, but simple things we can understand as people who are not tax experts. And so I'm glad to be here, ready for your questions so that we can delve into them and ensure that after the 1 hour, everybody will understand the simple things that we are supposed to do when it comes to personal income tax. Thank you so much for adding me to this program. Thank you.
Thank you, Isaac. We are happy to have you here today. Thank you, Fred, as well. So let's zoom into the questions. And these are questions that were shared by our audience today. So we'll take them one after the other. Hopefully we should be able to finish because there are lots, but we'll try and then complete these questions for you all today. All right, so my first question, let me take it now. Can you provide a general overview of the income tax system in Ghana? A general overview of the income tax system in Ghana. I think I'll throw this to Isaac first.
Okay, to start with, the general tax system in Ghana encompasses a lot. And I think that is why we have chosen a particular area, because we cannot use one day to go into all the areas when it comes to income tax. In Ghana, income tax started in the colonial days. It was introduced by the British in the Gold Coast era, where they had introduced the tax ordinances to raise money for the development of the country. It didn't work because they saw that people were embezzling the money. It was not used for what it was intended for, and so it was withdrawn. As time went by, various acts and regulations have been passed by Parliament and the government of Ghana to bring out rules to ensure that people pay taxes that they are supposed to pay. So today what we are going to do is to look at income tax in its three areas. Income tax is divided into personal income tax, business income tax, and investment income tax. But our focus today will be based on personal income tax. But income tax in Ghana as a whole encompasses three facets: personal income tax, business income tax, and investment income tax. What is this personal income tax we are talking about? When it comes to tax, a person has various meanings. A person in tax can either mean a company, it can also mean an individual, but it can mean a trust. So today when we say a person, we are talking of the individual income tax. An individual income tax, you are talking of your employment income, what you make from the work you do as an employee by way of contract of service. We are talking of if you are a sole proprietor and you have a business that you run on your own, that is not a limited liability company. It is part of your personal income. So tax has to be applied on it. If you are an individual and you are also putting money in investment in securities, it is also a part of your income tax. So these three makes up income tax for a person. I think I'll leave that here so that at least maybe as questions come on, we'll be able to delve into the deeper areas.
Okay, thank you, Isaac, for giving us this background and history to taxation. Fred, would you like to add something to what Isaac has shared?
Yeah, so Isaac has said it all. What you realize is that there is always a year of assessment for tax purpose. So in some jurisdictions, they will state that from July to June the next year. But in Ghana, what has been adopted is almost like the basis year by the Ghana Revenue Authority is always from January to December every year. So when you are filing your tax, unless you elect to have a different date as your tax filing date, which you have to notify them for them to approve, you are going to do as we talk about personal income tax, we are always going to talk about January to December every year. So as Isaac has explained how it started, I just wanted to add this one that January to December every year, every individual, so far as you are Ghanaian, you are in Ghana, you are a resident in Ghana, of which we will explain who a resident is in a later discussion, you are supposed to file your tax with the GRA. So you have to compile your details from January to December every year and then file with the Ghana Revenue Authority. Thank you.
Okay, thank you for that, Isaac. Fred, sorry. We'll move on to our next question then. How does assessable income differ from chargeable income in Ghana's tax framework? Assessable income differ from chargeable income in Ghana's tax framework. Fred, would you like to take that?
Sure. I'm sure the person asking the question has been to a tax office and this jargons has been thrown at him or her. Or otherwise, he was trying to file a tax and he saw this one. They can be a bit confusing, but it's very simple. Isaac explained earlier that there are three ways that you can have income. The first, you can have he mentioned personal income tax, business income tax, and then investment tax. Now, what happens that you as an individual, when you are filing your taxes, you could be asked questions as, is it from employment? Is it from investment? Or is it from a business adventure that or you've had somewhere? So you put all this together. So every revenue or income you get over the period, you put it together to call it accessible income. So this can be your salary that you've received over the period, the revenue you've obtained from your investment, from your business, if it's a salary that you are receiving, allowances that are being paid to you. Example, you go to work, we pay you transportation allowance. You have to add it to your salary, your basic salary, and call it accessible income. If you are being given risk allowance, it's also part of income, so you have to add it and call it accessible income. If you are given responsibility allowance, there are other allowances that are not cash based. If, example, you have a cook at home and the company is paying you, pay that cook, the company will have to quantify that amount and then charge you or add it as your income or income you are getting over the period. So all this one come together, all the incomes you are receiving, either cash or in kind, put together, become your accessible income. But you realize that maybe a government doesn't want you to pay tax on all your income just like that. There are some we call reliefs, some we call allowable expenses. And I will explain reliefs and as allowable expenses later also. So after getting your accessible income, you deduct the reliefs from it. Example of a relief is the employee contribution for Social Security. So in your salary calculation, if you take your pay slip, well, you see you have your basic salary, you have your allowances added together, then you have your accessible income. Then there's a 5.5% deduction, which is employee contribution towards Social Security, which is a relief, so you don't pay tax on it. So you deduct it from your accessible income. There are other allowable expenses. If you are able to prove that these are allowable, we deduct it, and then the amount left become your chargeable income, which we charge you the taxes on. So the difference between the accessible income and the chargeable income is just a thin line. The difference is just the reliefs. So you deduct reliefs from your accessible income and you get your chargeable income. And the chargeable income is the income that we charge the tax on. The accessible income is the income of all the revenues you've received to put together. So these are the two main differences. I hope I've made myself clear for everybody to understand. So when you go to tax office and you are filing your tax and they want to tax you on your accessible income, tell them that Fred said no, charge me on my chargeable income. So deduct all my reliefs. And there are other types of reliefs that we will talk about. I've spoken about the Social Security. We will talk about the marriage relief, the responsibility. Those ones we'll talk about later. I hope somebody will ask that question and we can break it down line by line. Thank you.
Okay, thank you, Fred. I really enjoyed that explanation. Very simple, very straight to the point. Now I know the difference between that. Isaac, would you want to add on, or do I move on to the next question?
Okay, let's see what I want to add. He has hit the nail on the head by differentiating between what an accessible income is and what chargeable income is.
Yeah.
The acts have gone further to say that your accessible income, like Fred have said, which is your employment income, your business income, your investment income, for the year of assessment. Now, the act have gone further to indicate that if you are a resident person, like I hope another person will ask that question, if you're a resident person and you are computing your accessible income, the act have gone further to say that your accessible income is going to be on a worldwide basis. It means that Betty is sitting in Ghana, but Betty is making an employment income in the UK, in Canada, in South Africa. Ghana have to tax that income. Betty is sitting in Accra, but you had a shop running for you in the UK. That income have to be taxed in Ghana. Betty is in Ghana, but she has an investment in South Africa, in Togo, wherever. Because you are a resident of Ghana for tax purposes, then all your income you have made from employment, from business, from investment all over the world is supposed to be taxed in Ghana, irrespective of whether that income has been taxed by the country that the business is or where the employment was exercised. All must be taxed in Ghana. So you have to declare all your income. That is if you're a resident person. But if you're a non-resident person, for the purpose of tax, then the only income from employment, business, and investment that will be taxed in Ghana is only what the source is in Ghana. So the employment was in Ghana. The business is in Ghana. The investment is in Ghana. So you are only taxed on the source of the income, which is accruing to you in Ghana, not all incomes you have made all over the world. So you should be able to know whether you're a resident person or a non-resident person. That will enable you to know whether you are going to declare all your incomes all over the world, or you're only declaring income that you have made it in Ghana alone. That is your assessable income. Then, like you said, your chargeable income, all you then need to do is take all deductions that the Act have permitted you to deduct from that assessable income. Then what is left, tax will not be charged on it. Thank you.
Okay, thank you, Isaac. The government is really enjoying them. So wherever I go, they're still going to tax me. That's interesting. Okay, I'll move on to my next question. All right, so what types of income are exempt from taxation under Ghanaian tax laws? Fred, would you like to take that?
Yes, I mean, the government and the framers of the Act thought it that there are some income that should be exempted. When we say exempted, means that will not pay tax. And the Act is very specific on those who are not supposed to pay tax. In generality, when you read from the beginning of the Act, you get the sense that it applies to everybody. And then when there's an exemption, except that you are stated specifically not to pay tax, you are supposed to pay. So tax laws are being framed in such a way that it will capture everybody in the system. If you have a different regulation or regime, the tax law itself will just come out clear with you. Now, there are types of income that we don't charge taxes in Ghana. Example, the first one, which is very prominent, is the president's income. If you become a president of Ghana, your income is not taxed and it can never be taxed. So the law allows that. The income of a cocoa farmer, so the income you receive, not income outside the cocoa, but the income you receive from bringing up the cocoa, you are not also taxed on it. Other one could be a local authority, those working in the government local authority regime, and which is debatable. The other one is if you have interest and dividend that you receive, interest payment is not taxable. When you put your money in M-Fund, Data Bank, EcoBank, the eParks, all those ones, they are not taxable. Pension schemes, if you put your money in tier 2, tier 1, you are not taxed. And there's a caveat for tier 2. It has a period that when you touch it, within that period, when you touch it, you'll be taxed. So you have to be careful on that one. So when you go beyond that period, you will not be taxed. There's also income of a student. If you're able to prove that you're a student and the money you're receiving is purely for your student activity, then you are not going to tax. So the diplomats in Ghana, they are not taxed. You remember Isaac mentioned that if you are a librarian and you are from United States, you're a diplomat, and you are in Ghana working in Ghana. You are not a diplomat. You're a United States a worker working in Ghana. So far as you stay here for a number of days, you are supposed to be taxed. But if you're a diplomat, you are not taxed. You can be here for the whole year, for 2 years. You will not be taxed. The income of private universities are not taxed, and education and research institutions, they are also not taxed. So these are the few types of incomes that are not taxed. Apart from this one, unless it's specifically stated by the act and the law, you will be taxed and you have to be ready to pay tax. So if you ask some of the income that are exempted from tax, I'll give you this one. And the prominent among them is the president one. I mean, so these are the taxes that are exempted from, these are the income that are exempted from taxes.
Okay, thank you. So they take our tax, but their tax are not being taken. That's interesting. But I've learned something about the cocoa farmers' income today. I mean, it's something I didn't know. Thought it was all business and all farming, so then they also be they are not exempt from tax. But I've learned that well, that's interesting. Okay, Isaac, would you like to add on?
There are many, so he has mentioned some. Let me just add a few.
Okay.
For us to make it complete.
Okay.
The next one I want to mention is when you are made redundant in your workplace. When you are made redundant and you are paid an amount of money, that money is exempt from tax. But there is a caveat. And the caveat is that if you yourself have resigned from the company and the company still goes ahead to give you money, that money is supposed to be taxed. It is not the same as when the company lays you off. So when the company lays you off and you are paid money, that money will not be taxed. But if you yourself have resigned and you are given some money, then it will be taxed because you yourself resigned. The next one would be medical and dental benefits on equal terms. If Insano should go ahead and decide, okay, we are giving medical and dental care to all our staff on equal terms. On equal terms means that senior management will have the same level. Junior management will have the same level. It doesn't mean that when we say equal terms, senior management will be taken the same as junior management. No. It means that at each level, it is equal. It's equal. So that kind of medical and dental benefits all will be exempted from, even though they are benefits to you, because employment is any gain or profit you make from the employment is supposed to be taxed. But these are particularly exempt because it is given to employees on equal terms, and therefore it is not taxed. All right. Now, any payment benefit that is given to employees on a non-discriminatory basis is also exempt from tax. For instance, if you are giving meals at work or you are giving counseling at work, ordinarily you are paid for these things. You are paid for the food, you are paid for, if there was a gym, you are paid for it, but it's free. If there's counseling going on, you are paid for it, but it's free. If there was no car park in the company and you're going to park your car somewhere, you are paid for it. But the company have given you all these on a non-discriminatory basis. So on that score, it is exempt from tax. If you are working in Insano and you are transferred to a different country, and Insano decides that, okay, we are going to give you transportation money, your flight ticket or your per diem or whatever, that is a benefit. But the law says that it should not be taxed. Don't put tax on it. There's also a caveat on this. If your family is part, so you are traveling with your family to go and work for Insano somewhere in a different country, and the company also buys plane tickets for your family or give them per diem, that aspect of it that is to your family will be taxed. The aspect that is for you will not be taxed. That is exempt from tax. So that's the caveat. If you work with government of Ghana, the Foreign Affairs Ministry, then you are taken outside of this country to go and work, and you are given cost of living allowance. It is a benefit from the government to you, but the law says that it is exempt from tax. If you work for a company and that company gives you accommodation closer to your workplace, it is a benefit. You must pay tax. But those that are exempted are if you are working in a construction site and the accommodation is closer to the construction site for you to work, it is exempt from tax. You don't pay tax on it. If it is a mining site, if it is a farming site, if it is a petroleum site, all the risky areas, if you are working and your employer gives you accommodation, it is not quantified and tax placed on it. It is exempt from tax. But if Insano gives you accommodation which is closer to North Legon here, and you stay there and come to work, government will tax it because it is not at a place where it is risky for you to stay. Foreign source of income, the last one. Now, I made mention earlier on that all the incomes you make from any country, if you are a resident in this country, is supposed to be taxed. But the Act says that if you're a resident person and you are working for a non-resident employer outside the country, UK, US, wherever, or the employer is resident in Ghana, for instance, MTN, and takes you outside to go and work, and you travel there to go and work, the salary you make there will either be taxed in Ghana or not taxed, depending on the situation. One, if it is within a period of 182 days, that is half year, all those months' salary, you have to declare it for tax purpose. But if you have stayed in that country to work for the employer for 183 days or more within the accessible year or the fiscal year, then that income is also exempt from tax. I'm adding all this to what Fred has mentioned already because we are employees and therefore sometimes we can encounter all of this so that you will know what you are supposed to do or the tax implications of these things. Thank you, Betty.
Thank you, Isaac. Well, there are lots of things that are exempt from tax that we don't know about. Are they all listed in the Tax Act? Where can we find all these exemptions?
They are all in the Income Tax Act, so everybody should buy it. And when you buy it and you read, you understand. If you don't understand,
I
just
think it's
ask
very
somebody.
necessary. Yeah, so we know those that we are exempt from and we don't have to pay. It's very necessary. Thank you. Okay, let me move on to my next question. Okay. So the questions are similar. One is asking of how pay as you earn is being calculated on individual employee, and how do we calculate employee income tax? So I'll just merge the two. So Fred, can you take this question for us?
Right.
How pay as you earn is calculated on individual employee.
Right. So remember we mentioned accessible income and chargeable income. And accessible income we mentioned is all your emoluments or income put together. And your chargeable income will be accessible less the reliefs that you have. Now, a popular question that normally comes from there is that, then why don't I tell my employer to push all my salaries to allowances so that I pay small tax and I get a lot of take-home pay? And that would be an error in thinking, because when I explain accessible income, I also added that all your allowances you receive, either cash or in kind, if it's cash, it will be added to your basic salary. If it is in kind, the Act prescribes a manner at which it should be quantified and added to your basic salary. Then we deduct the reliefs, then we tax it. So it's just shifting the goalpost. Either it's part of your the total emolument, or either it's part of your basic salary, or we just separate it and say that if your salary is 100 cedis, your basic salary is 10 cedis, your basic salary is 50 cedis, your allowances total 50 cedis, then your total emolument is 100 cedis. We are going to tax all the 100 cedis. In the same way, from the onset, we say it is 100 cedis, we are still going to tax the 100 cedis. So either we name it allowance or not, it's taxable. Allowances are taxable in Ghana. and you can't run away from it. It's taxable, except is a reimbursement. Example, your company, a number of people are on the call, and where they work for. If your company asks you to go and buy, in simple terms, water for the company, and the company pays that money to you, that is not taxable. The company will not deduct or not add it to your salary and then charge you a PAYE. I just put this across so that whilst I'm explaining the rates for PAYE, you can get it. So we would have done some mathematics here. So assuming your salary is, let's say, for argument's sake, 5,000 cedis. Now, we have added all your allowances. Your salary, let's come back. Your basic salary is 4,000. Allowances, 1,000. You get a total emolument of 5,000. This is your accessible income. Now, what we will do for the first start is to deduct your Social Security relief, which is 5.5%, and then the remaining you will charge the PAYE on. Unless you have other reliefs like child benefit, dependent benefit, all those ones will be deducted. Now, in simple terms, let's say we don't have any of those, because those ones you are supposed to apply to the revenue authority before you can deduct them. Now, the one which is constant to be deducted is your Social Security relief, which is the 5.5. So either you apply or don't apply, that relief will be deducted before taxes are charged. So now you have a total of 5,000 cedis. We deduct a relief of 5.5%. The remainder will be taxed at the graduated rate prescribed by the revenue authority. And let me put this across. Almost every year, I see that these rates are changing. It's just about 3 years ago, within the period from COVID to another year, that the rates didn't change. But almost every year, I see Parliament approving from the finance minister's budget to change this rate. Also because the minimum wage keeps going up, so this rate has to change. Now, the amount left to be charged tax, the first 490 cedis of the amount is taxed at zero rate. Zero rate will always almost mean like there's no tax on it. Then we will take your money, the next 110 cedis will tax at 5%. Then the next 130 cedis we also tax at 10%. Then the next 3,166 cedis we tax at 17.5%. Then we go to the next. So this is the bracket that most will not go to. 16,000 cedis we will tax at 25%. So anybody making about 19,000 to 20,000 a month is being taxed to a maximum of about 25%. Then another rate of 30% is applied to the next 30,520 cedis. Now, a new rate was added, which is 35%. I think later, ending of last year, 35% was added, that if you are making emolument more than 50,000, they will tax you at 35%. Because Isaac explained the resident and non-resident there, I want to add that if you are non-resident of Ghana, you are likely to pay 25% flat on your emolument. So any amount you make, we will charge you 25%. So if you ask about a graduated rate for employment income, this is what I've mentioned. You start from 490 cedis, which is charged at nil. You go to 110 cedis, which is charged at 5%. 130 cedis, which is charged at 10%. Then 3,166 charged at 17.5. 16,000 you charge at 25%. 30,520 30%. 50,000 charge at 35%. What's happening in the system that a lot are building softwares to help calculate this. So when you go to the Play Store, the App Store, you're able to get somebody building a software. Even on the GRA website, they have a dummy calculation there. You can just go there, play with it, input your total emolument, and see the amount you are paying in taxes to the state, and then the reliefs that you can also have. I think this can do justice to the question.
Yes, thank you. Thank you. Yes, you did justice to it. So within a range of 5% to 35%, right? That's
Right,
the tax. Okay, that's good. Unless you're a non-resident,
right,
25%. Okay,
right.
good. Great. Okay. Isaac, would you want to add on?
Yes, he has said all of that, and it's on point. I just want to pick some few items that affect everybody in our workplaces. So fair to saying that from your basic salary, you add all your cash allowances, you get a total cash emoluments, all the way down to where you will now apply your taxes. Now, with your allowances or cash allowances, there are three things I want to mention that affects all of us in our various workplaces. One of them is bonus. Now, when you are working in your company and you are given bonus at the end of the year or at any point in time, that bonus is considered as a benefit or profit that you are supposed to pay tax on. But the act has made it in a way that you have to follow. If the bonus that is paid to you is up to 15% of your basic salary, then tax will have to be charged at 5%. If the bonus given to you, right, it is up to 15% of your basic salary, then it is taxed as a final tax at 5%. So it will not be added again to your profits when you are filing your tax. The excess, if there's an excess above the 15%, that is what you will add to your cash allowances to be taxed at the graduated rate. The next one is overtime. Most of us at workplaces, you find yourself doing overtime, and overtime is being paid. When you are paid overtime, it is supposed to be taxed. But if you are what we call a qualifying junior employee, there's a different way your overtime is going to be taxed. If you are any normal employee, a senior member, and you are paid overtime in your company, all of that is going to be added to your cash allowances and tax charged. But if you are a qualifying junior employee, and who is a qualifying junior employee according to the Act? It is somebody who is a junior employee, number one. And number two, the person's annual salary does not exceed 18,000 cedis. It has been there in the Act for a very long time. So you are classified as a qualifying junior employee if your salary, your annual salary, does not exceed 18,000 Ghana cedis. That means 1,500 a month, if I'm not mistaken. Okay. When it happens that way, then that overtime, 50% of it, or if it reaches your salary at 50% of it, tax will be charged at 5%. The excess of 50%, tax will be charged at 10%. So if you're working in your company and there's overtime, and your finance people are taking tax from it, they say, oh, we are taking 5%, we are taking 10% from your overtime, and you don't understand. This is what the Act is saying, that if you are a junior qualifying employee, your salary is supposed, your overtime is supposed to be divided into two, up to 50% of it, 5%, the excess is 10%. It is not added to your cash allowances and tax at the graduated rate. The next one, which is the last one, is clothing allowance. Most companies provide clothing allowance for their staff. Now, this clothing allowance, you are supposed to pay tax on it because it's a benefit, it's a profit from the employment. But if the clothing allowance given to you is in a way that you cannot wear the clothes somewhere, but only to work, then it is exempt from tax. But if it is not so, but you can wear it to any place at all, it is supposed to be added as your cash allowance and be taxed. I think 2020, the Association of Bankers had to go to the Commissioner General for a class ruling that the allowances they were given for their clothing, in fact, they wanted it to be exempted from tax. And the Commissioner General said, no, I will not allow you to take all as exempt. So I'll take 20% of it out and the rest will be taxed. So when you are working at a place and there's provision of clothing allowance, and it is not in the form of a uniform or the logo of the company is on it, it's supposed to be taxed. If it's just giving you money, okay, take this because you have to dress well, take that because you have to dress well. It is supposed to be added to your cash and be taxed. I think these are the three I want to add to all Fred have mentioned on PE. Thank you, Betty.
Thank you so much, Isaac. I'm very glad you mentioned the overtime because some staff don't really understand why they work overtime and then you take the money because sometimes they calculate the money. They know that hey, at the end of the month, I'm getting maybe 1,000 or 1,500. So when it comes and it's reduced, they just don't understand why it's supposed to be taxed. So thank you for the clarity. And the clothing allowance too is very interesting as well. Because I mean, it's something that you have to wear. Why do you have to tax me? So I like the fact that you provided clarity to it. Thank you. Let me move on to the next question quickly. Okay. So this question, all right, can you provide more explanation on direct, indirect income and non-tax? Isaac, I think this question will go to you. Would you like me to go over the question?
Yes, please. Go over the question.
Okay. Can you provide more explanation on direct, indirect income and non-tax?
Okay, so the person wants to know the difference between direct and indirect taxes, right?
Yes.
Okay. In its simplest terms, direct taxes are taxes that you pay directly from your income. So for instance, you are paying tax from your employment income. That is direct tax. You are paying from your business income. That is direct tax. You are paying from your investment income. That is direct tax. This kind of taxes, the burden of the tax cannot be shifted to anybody else. You are the one who is going to feel the pinch of the tax. So the burden cannot be shifted to anybody else. Unlike indirect tax, that is tax that is imposed on goods and services. So you are going to buy something, there's tax on it. For example, VAT. You go to the supermarket to buy something, they charge you VAT. That is an indirect tax. You are buying some drinks and they put excise duties on that. That is indirect tax. Now, these indirect taxes, the burden on the tax can be shifted. That's the difference between the direct and the indirect. With the direct, you cannot shift the burden to anybody. But with the indirect, you can shift the burden because if you also go ahead to sell the good or service to somebody, that person is the one who is going to bear the tax and you will not bear the tax. But with the direct tax, you are the one who is going to bear the tax. So these are the difference in the simplest terms.
Okay. Thank you, Isaac. Fred, would you like to add?
Yeah, Isaac has said it all. I mean, he did justice to it. But, the direct tax, you see the tax and affect you directly. The indirect tax, you are more likely not to see it. So, at the end of the day, when I enter Accra Mall to buy something, I'm charged VAT. Example is an indirect tax. They are not going to explain to me that the cost is 100 cedis. The VAT, total VAT on it is 21.9 cedis, making 121.9 cedis. I mean, they will tell you that the total cost is about 130 cedis, and then you get the receipt, you check, the actual cost is really 100 cedis, and then you are paying almost 30 cedis as VAT. The same way if you enter any restaurant, the same thing. When they give you the bill, they tell you that you've used about or you've consumed about 1,000 Ghana cedis. You take the bill and realize that the actual consumption was about 900 or 800 and something, and the rest are taxes. And so, example of the indirect taxes will be the value-added tax, the GET fund, national health insurance levy. You also pay the tourism levy. Those are example of indirect taxes. The tax that affects you directly, like a PAYE that we pay, it's a direct tax because the emolument you have, you put all your money together, you are thinking that at the end of the month you have 2,000, you are taking 2,000 cedis home. But after taxes, the money has reduced to 1,500 or 1,550. So that's a direct tax affecting your income directly. So I think this is what I will add to it.
Okay, thank you so much, Fred. Okay, so we have some few minutes more to go. A lot has been said, and most of it is directed towards, the Ghanaian tax or the act, right? I have some questions that pertains to, the outside the country, right? But I just want to know now, the audience, where you are joining us from. So if you are joining us from another country, just send me a chat. Let me know where you are joining us from, so I'll know which of the questions to pick, because there are a lot. So I just want to know, so I know where we can direct our questions to. So kindly send a chat and let me know which country you joined us from. Okay, so I'll just move on quickly whilst I wait for that to the next question. What are the tax implications for someone who works from home and receives nets tier 2 and 3 as one bulk payment? Isaac, would you like to answer that?
You work from home.
Yes.
If I understand the person well, it means that the person works for a company outside Ghana.
Likely, yes.
Then
and it's
you are
taking
home
all
working.
the payments, yes.
So your salary comes and they tell you your tax is in there, your social security is there, employer contribution, and then your own contribution, 5.5, then 13, everything is in.
Yeah, yeah.
It's simple. They don't want to go through the hassle of trying to separate it and send it to Ghana. So they want you to take it as a corporate citizen so that you'll be able to pay that. Now, with your income tax, what some people do is that they take that money and they go and pay SNIT any amount they want. If they have a second, any other tier, third tier they want to, they send some money there. Then you compute the payee, then you go and pay. Now remember, if you think you are going to dodge, you are not going to pay that tax. One day you could be traced to the bank. You have been receiving money from UK. And this money, what is it for? Later on, it will be noticed that it was salary given to you. Have you paid your income tax? Payee? No. At that point in time, you would have to pay and pay penalties in addition. So you just have to be a corporate citizen. When you receive that money, get a tax person who understands basic tax to do the computation for you. Then you can go and pay. The reason why you have to have somebody who understands tax a little is because of some of these things, so that you will not be paying penalties. You will not be found wanting at any point in time. I, as a tax consultant or a tax practitioner, my duty is to be in the middle so that people who have come to me to ask for tax advice, they will not pay a cedi more than they're expected to pay. And to also ensure that GRA doesn't collect money more than they're expected to collect. So the tax advisor is in the middle. It's an in-betweener. Some people say, look, I've made the penalties and all of that, and so I'm not going to pay. If you're not going to pay, the law will catch up with you. At least for relationship's sake, some of us have been able to get a relationship. If you ask Fred, he will tell you, you have to know people at various tax offices. In Accra, the number of tax offices that you have to know to ensure that when you have a client who is having an issue, you can easily go there and sort it out for the person. But yes, when you receive that money, get somebody who understands little of tax, be able to help you so that you can file. Don't keep it. It's not good. Thank you.
Thank you. So don't think you're working from home, you're receiving money and you're spending and no one is watching. At one point in time, yeah, well, the law will catch up with you. So make sure you file everything and see a tax expert for that. Thank you, Isaac. I'll move on to the next question quickly. A student at a university who will be doing model taxation. So I'm a student at a university who will be doing model taxation. Would you mind helping me kill my curiosity about the model? Fred, would you like to take that?
Right. So the person wants to want me to whet his appetite or her appetite in taking the task course.
Exactly.
I mean, I don't know um, which countries, the countries I know in the world, which of them don't tax citizens or tax um, institutions or persons. Tax is everywhere. It's everyday life. In fact, we create more tax laws than any other law we create in the world. So every year, every budget, especially let's give example in Ghana, every budget that we read, there's a tax amendment in it. You go to other countries, there are also tax amendments. Now, in blocks of regions are coming together. ECOWAS has tax regime, African Union has a tax regime. Then you go to the worldwide, OECD has a tax regime, UN countries. So tax is part of us every day. What I will tell the person is the person should start warming himself into the course, because it's one thing that you enjoy doing all the time, and trying to compare taxations among countries, even in country, between different corporations. So what are the person should just warm himself in it. And tax is not there to kill anybody, to rob anybody. And if you check the budgets of Ghana, taxation is the major percentage of income for the government, almost 70 something percent, and is the revenue government gets to finance all the expenses. Means that tax is not going to go away anytime soon. It's going to be with us so we leave this earth. So what I'll tell the person should start enjoying it. Go and do the tax. It's more like reading a bit of law, but now calculating the law itself, because I hear lawyers don't like mathematics. But now being a lawyer and being a mathematician, putting those two together. So you should just warm yourself into the tax arena and try to read more about taxes, listen to podcasts about taxes, and join webinars such as this to understand how tax regimes are being managed in different countries. And the person will be fine. You'll come back and say that is the noble profession that he's taking, because your friends will come to you all the time to advise them. And when you go to the other countries, you don't see anybody from the tax office. You always have to file online. And if you don't have somebody advising you, you make mistakes and they get penalties from you. I read an article that in the United States, the misfilings people do give them more money. So if you don't file well, the country will get more money, because penalties and interest will accrue on your filings. So you have to, somebody will come to you to advise him or her, and you advising you, I'm sure you're going to charge per hour. Thank you.
Yeah, thank you so much, Fred. Isaac, I know you also lecture in this area. So as a lecturer, how would you also groom this person's appetite in the model he or she is going into?
Well, I think what Fred has told the person, but now the person appetite is being whetted. But then when it comes to the finance area, tax is one of the areas, if you want to actually practice accounting and finance, tax should be the area you should be thinking about. It is very lucrative, number one. And number two, things are very real. They are everyday life issues that you tackle. Can you imagine somebody, a man in the US, maybe some of you will know, but I don't want to mention it. His tax consultant became rich overnight. How did the person become rich overnight? They passed a tax law in the US that if you have an area that is a graveyard, okay, all properties sited around that graveyard area is exempt from tax. And this man in the US is very rich, very wealthy. Everybody mentioned his name every day. His tax consultant told him that, look, why don't you, I think the wife died. Yes, the wife died. And the tax consultant said, let's bury your wife in this your estate. So they buried the wife in the estate. Then it was declared tax exempt. So all the bill, property tax, every tax, he's not going to pay. Now, it is because he has a tax advisor who advised him well, who looked into the tax law and saw some loopholes, used those loopholes to advise the client, and the client applied it. and everything was okay. Tax is a very nice area. So I'll tell the person, just endeavor. We are told, even though we are not sure yet, that there's going to be a regulation that will come out from the minister. So even if you are going to lecture in the university, in a way, you are supposed to be a member of the Chartered Institute of Taxation. And so it's going on. I mean, people are talking. So if you want to practice tax, you want to be a lecturer, all of that, just go ahead and pursue that career. It's going to help you a lot. Thank you.
Thank you. So I believe the person is listening, and even me, my appetite is already wet. I think I have to go and take a course, right? In taxation. Okay, let's move on to the next question. What deductions of tax reliefs are available under employment income? Fred, what deductions or tax reliefs are available under employment income? I think let's be brief with this. We have 3 minutes more, so let's be brief, but the questions are many.
Right. Let me try to run through. I mean, okay. I'm sure what the person is trying to do is to see how the taxes he is paying to the government will come down. I mean, in a rightful manner, not evading tax. If you're able to bring your tax down, it's not a tax evasion. I mean, it's right. But the reliefs are many. Like I mentioned earlier, I mentioned that the first relief is the Social Security relief, the 5.5% of your emolument. That is compulsory. No matter what, the employer will not tax you on that. Now, there's other reliefs that are available to us. The first one, notable, is marriage or responsibility relief. So if you have responsibility at home, your spousal responsibility, your spouse is not working, the government is saying that I can relieve you of 1,200 cedis per annum. Let me add a caveat, per annum. Now, so I'm married, my wife is not working. It's a responsibility on me to look after my wife. Now I have to prove that to the Revenue Authority and then apply for that relief. So this one you have to apply for. Child education. If you have children up to 3, the government is saying that you have relief of 600 cedis per child. So it has a maximum of 3. For the reason why the government made it 3, I don't know, because some of us I know can go beyond 3 to 5, 6. So he's saying that the child education, but there's something here that the child doesn't need to be your biological child, because the Act didn't explain child to be your biological child. So if Betty, I'm kind enough to say that give me your daughter to be with me, and I'm taking care of your daughter, I can file for child relief, because I can say that she's my child, because I'm taking care of her, and I can prove that. And there is also old age relief. You have 1,500 per annum. Then aged dependents, if your parents are with you, or you are taking care of your parents anywhere they are, you are allowed 1,000 cedis per person for the 2 people. So, and that also the Act couldn't state biological parents. So you have to prove that they are your parents. How you prove somebody not being your biological parent, I mean, that will be on you. So you should be able to prove that they are your parents. And then training and development, we can get a relief of 2,000 cedis. And now what the law is saying, the Act is saying that it's something that is going to enhance your skill and your professional capability in the work that you are doing. So as an accountant or a tax practitioner, I go to Chartered Institute of Taxation and I go to school. When I bring my receipt, the Revenue Authority will give me a relief. If it's more than 2,000, they'll give me a relief of 2,000. But if it's less than 2,000, then I get a full relief. And there's also disability relief. Disability, if you're a disabled person and certified by the Ghana Disability Board, you are exempted or you are relieved of 25% of your accessible income. So we spoke about your accessible income being all your income that you have. When you subtract your relief and you have your chargeable income, so all the income that this disabled person will have, 25% of it will not be taxed. So that's the disability relief. And so I cannot go and say that I'm disabled, so I want 25%, because I have to have a certificate from the disability board, and they will look at you, will examine you, go through your records to say that you are disabled, so that some of us don't try to outsmart the system. So these are types of reliefs for us we can enjoy. What you have to do immediately is to talk to your accountant or go to a GRA website, download the relief form, complete it, submit it to GRA, or let your accountant help you to submit it to GRA, and the GRA will approve this relief and it can be applied for you immediately. And also, I mean, a matter of concern I've been discussing in the tax arena or tax community that these reliefs were set far back as 2015 and they are being outdated. So now you can imagine 1,200 in 2015 is not the same now. So there are a lot of discussion going on for the Revenue Authority to increase the relief figure so that when you are taking it, you can be happy. Now, a lot of people are not taking it because we see the amount to be small, because it's just the marginal or the percentage that's being taxed are being really benefited from. So these are the relief that are available for individuals, and you just let's all apply for it, and because it's for us for free.
Yeah, thank you, Fred. These are very interesting reliefs, and I would urge everyone to really look into it. Go to GRE and file, because I mean, it's money there for you for free. So why not? Let's go and then file. We'll take the last question. There are so many questions here, but we'll take the last one and then we'll call it a day, okay? So this question will go to Isaac, okay? What strategies can individuals employ to minimize their personal income tax liabilities in Ghana? If we can do this in like just a minute, okay? Isaac, I think you're muted. You're muted.
Okay, sorry about that. All right. I think it's talking about tax planning. To be able to minimize your tax liabilities and not to pay more taxes than you are expected to pay, you need to plan your activities in a way that you will not incur penalties. If you are a self-employed person and you know that I'm supposed to pay my payee before or on the 15th of the month, why would you wait till after 15th and then you go ahead and then file and pay? Penalties will come in. There are some things you can do if you are a sole proprietor and individual who has a business. You can make contributions to things like sports organizations, things like orphanages and whatever. And the Act allows you to deduct them as deductible expenses and it will not be taxed, for you. Now, Betty, I want to just add something because of the time, that a question nobody asked, and that is about, we have been mentioning resident. If I don't add the resident to it, in fact, I don't think our discussion would have been completed. A resident in tax is different from a resident when it comes to the constitution or law, right? And your tax is paid. No, Fred was saying that if you're a resident person, you are paid tax on the graduated rate. But if you're a non-resident person, you are paid at the flat rate of 25%. What makes one a resident and what makes another a non-resident? First of all, if you're a resident, it means that you are a citizen of Ghana, first of all, a Ghanaian citizen, right? Then you are a resident for tax purpose. A Ghanaian citizen who lives in Ghana is a resident for tax purpose. You are an employee or an official of the government of Ghana, and you are posted abroad during the year of assessment. You are a resident of Ghana. You are a Ghanaian who has a permanent home in Ghana, but you are temporarily absent from Ghana for up to 365 continuous days. So a Ghanaian, you have a home in Ghana, and you are absent temporarily from Ghana up to 365, that is up to a year continuously, not aggregate, then you are a resident for tax purpose. If you are not a Ghanaian citizen by constitution or by birth or whatever, and you have come to Ghana, you are Lebanese or an Indian, and you've come to Ghana, and you make up to 183 days in any 12 months period, it is aggregate, it's not continuous. So if you come to Ghana in January, you spend that month, you leave. You come the next month, you spend some days and you leave. And it's counted up to 183 days. Then you are a citizen of Ghana for tax purpose. That is sort of you use to determine what tax you are supposed to pay. So the person asked the question about the prospect of taxation, assuming that you have been able to get somebody like the DIU as a tax consultant or any of the footballers, and then you are able to advise the person. The year has ended, then they read the budget in December or November. You go ahead and calculate to see whether it will be good for him to be a resident next year or a non-resident next year. So when you do your calculation, you say, I think that for you to pay less taxes, you have to be a non-resident. So don't come to Ghana next year. Or if you become a resident, then you pay lesser tax. So come to Ghana next year, go back, come and go back. You can come and spend 1 day, 2 days and go back. So this is what we use to determine what tax you're supposed to pay as either a resident or a non-resident. So residency doesn't mean by birth or by way of constitution as a Ghanaian, but it's just for tax purposes. Thank you.
Yeah, thank you, Isaac. Thank you. So a quick question to that. So if I stay in a country and I don't want to pay the tax for the 183, I can travel, come back, so I avoid the tax, right?
Yes, that's part of the tax planning you do.
Okay, all right, that's good. Thank you, Isaac. Thank you, Fred, for giving us insights into the various questions asked. I mean, today we've done some history into taxation. We've learned about the difference between accessible income and chargeable income. We've gone into incomes that are not taxed, and also delved into some progressive payments when it comes to salaries in terms of the income tax, and also the reliefs available for us as individuals, okay, in the institution or in Ghana specifically. Thank you so much. Before we leave, I would like to take your final words, okay? I know there's a lot to talk about in tax, and this one day, it's very possible that I'm going to call you back because there are a lot of questions we've not answered. But if you can leave us with your final words. Fred.
Yeah, so
your final words before we leave, please.
Frederick the Great, my friend, said no government can exist without taxation. The money must necessarily be levied on the people, and the Grand Act consists of levying so as not to oppress the citizen. So government tax us to be able to build the country. What I will entreat everyone now in Ghana, and those of us in Ghana, and even those outside Ghana, we understand who is a resident now. If you are supposed to pay your taxes in Ghana, what I will entreat everyone is one, to go to the taxpayers portal and register there. Then file your taxes every year. At the end of the year, talk to your accountant that you want to file your taxes. So it should help you complete your supplementary 51 documents. So you go and file. What it is that you can easily get your tax clearance certificates. And we are making it a big deal in Ghana by law that you need a tax clearance to be able to import anything that you try to import, to get contracts, to be appointed to the board of financial institutions, to be approved by the Bank of Ghana. So you have to go and register on the portal. It also helps you to know your tax records over the time. One day, one of you will be called, or one of us will be called as a minister, and we will need our tax clearance. We will need to just go back to the portal, pull it for them, and it's easy. So this is what I'll leave with you. Let's try to be, let's try not to evade tax, but we can avoid those that are hard for us. I mean, by talking to our tax consultants and then paying what we are rightfully supposed to pay. Don't try to dodge tax. Otherwise, when you are caught in the law, you have a difficult. Thank you.
Exactly. Thank you, Fred. Isaac, your final words.
By way of my final words, I would just say that tax is a necessary evil. Nobody wants to pay tax, but let's pay our taxes. When you pay your tax, it puts you in a position to be able to demand accountability from our leaders. If you notice, some years back in companies, anytime you wanted things to do concerning your tax issues as an employee, you have to go to the finance department. But now it is not so. Government says that tax consultants are those who are supposed to do the work for you. So get them to do it for you. Have a tax consultant. The tax reliefs Fred spoke about, you may not understand them or know how to apply for them. Get somebody who understands tax to do it for you. And when you do all those things, you will always be ahead of the law. And I think that when we do that, we'll be able to build a better Ghana. And then we ourselves will also be good. Thank you.
Thank you, Isaac, and thank you, Fred. I mean, today we've heard it all. We still have a lot to talk about because taxation is very broad. And thank you for simplifying it for us today. We are very grateful for the time you spent with us. And thank you to the audience as well for staying through in this discussion. We are going to place this recording in our social, so on LinkedIn, Instagram, and on Facebook. You can go like, share with others you believe would be interested or would benefit from the discussions we've had today. Now, if we didn't answer your question, please go to the handles and then under the video, just put your questions there and we'll be kind enough to answer them as well. If you are not too clear about something, just go on there, put them there, and then we'll do well to answer. Thank you for your time. And as mentioned, we have this webinars every third Tuesday of the month. And so if you like, you will get notification on when the next webinar will take place and which topic we are going to treat. So make sure to like and get your notifications. Thank you once again. We'll see you all next month. Bye.